All right, hey guys, Sam back with you here on Monday, July 9th here, and I thought I'd kind of bookshelf here the Ethereum video that I just did, Ethereum to the dollar with Ethereum Classic. So this is one of my favorite projects in terms of just the fundamental story. So I get that disclosure revealed here. Yeah, I am long this. So that said, now I've got it up here on Bitfinex. Now let me show you why here, and I've got it to the tether. So if I go over here, I'm just on TradingView, and I've just pulled up Ethereum Classic. I'm looking for where the volume is. So I'm just sorting this based on where we see the trading volume. You can see the majority of it is to Bitcoin on Binance. I've also got number 2 here is Bitcoin to the dollar tether on Binance. The problem with Binance to the dollar tether here, if I can find this, is we only got about a year's worth of data that it's been on Binance. So I'm using Bitfinex here to give us some more historical context, just to get a couple of things I wanted to show you. And then we'll look at both of them here in this last little drive here that we've had, as there's some things that are worth pointing out. So looking here now, when we first look at this, so you look at that and go, all right, where's my Elliott count? Well, you know, this is a bit of a cluster. It's hard. There's nothing just jumping out at you, but I can make that a lot easier to see by just going to log scale. So you'll note here that if I go to log scale, now we get the compression of the higher numbers. But that often can be a useful way to get the separation that you're looking for to help you identify the wave count. So given that, it's fairly obvious here what we can do this. We can get, well, let's, oh, looks like I've got, there's my 3. It looks like I've got an expanded flat here, and then I go up and I put in my 5 there. So, not once you put it into log scale, not that hard to get to see what we've got there. So I've got a clear impulsive wave structure from low to high, right? We're going all the way back here to 2000 and it's early 2016 to this high here, which was January of 18. So you got a nice trend there that is clearly a 5-wave impulsive structure here. Now, as to where we are here and what's happening, well, you know, again, I'm kind of back to this place where if the count is not obvious, it's better not to force it, because we don't have to have clarity on the long-term count to be able to trade it. So so clearly from swing low to swing high, I've got something here. Now, granted, here this is going to look different because whenever you're in log scale, you get all the compression of the upper numbers here. So you can see it from swing low, swing high. Well, if this were a 1 wave, we're looking for a 2 anywhere from the 50 to the 786, and we are not gotten to the 7. We've certainly broken the 65 repeatedly, but we've not made it to the 786. So it's a, first thought is that you might have a 1-2 going in here, knowing that a 2 can go that deep. It's a contender. Now I'm going to break this down here. So let's let me see. I'm going to go to let's go to a 2 hour. See if that'll give me enough to look at this coming down. Yeah, that should work here. Okay, so from this pivot here, we can take this off as we've got that fairly well established. This is a better example. So my members, I know you will likely have watched the Ethereum video where I talked about the problem we had with the WXY there, in that the X wave was too shallow. Well, this actually gives us a fairly good example of what the folks over at Elliott Wave International are talking about when they're looking for the depth of the retracement of the X wave. So I can get an A, B, C coming down here, right? That's fairly easy to spot. So I'm going to call this from the startup here. Here's my W wave. Remember, all we're trying to do is connect to ABC. So I got an ABC down there. Well, now here's my X wave, right? Now that is much more in line with what they're looking for in terms of qualification or tendency for an X wave, as it's damn near 90%. I think it's the 88.7 to the tick before we come back down. Now coming down here, hard to miss the 1, 2, 3, 4, 5, right? So I've got an A wave here. Yes, I can get an A and a B and a C into this. The C being short relative to the A wave, but it's there. So I can get, so coming down here, it looks like I can get an A, B, and then potentially now I've got a C in here. So if I just adding it, so then you'd see it this way. A, B, and C coming down here. So we'd have a qualified and consistent with the current thinking on WXYs to give us a contender here. Let's move that down just a hair. So we'd have a contender here for a WXY with this as a potential, just that potentially, a good pivot here. So, you know, a couple of just easy things here. So I'm going to take it out of log scale so we can just look at it so it'll look a little bit, it's just a little bit easier to read it here. So let me get back into auto. Okay, there we go. So from my swing high here, you know, just the basic stuff. It looks like I've got a 1-2 here. So this from here to here. Now that this gets a little sloppy here, we get a slight push through the 65, but boy, hell of a reaction. So if that's 1-2, we know the 2 can go anywhere from the 50 to 786. So it qualifies as a 1-2. Boy, that's a heck of a good 3. And then you can see 1, 2, 3, 4. So not likely to have much, although maybe the 23. So if I look at that is my 2, and this is my 3. Well, here's my 23, right? We know this is prime zone for a 4. All right, now take note here what's happening. So 1, 2, 3, 4, 5 gives me a clean, impulsive A wave. So from that, then I can get here, I can get my A, B, and my C here. Now let's lower that degree and go down. Let's get so it makes sense and we don't lose track of where we are in the count. Okay, so there's an ABC. So I've got my 5 down for my A. I've got my ABC into my B, and it would look like I've got, you know, it looks like I can get a 1, 2, 3, 4, and then swing down for the 5. So I've got everything I need to give me a clear count. Now, excuse me. Now, just pulling back out again. Let's see if I have to go to if I go to the 4 hour. So we can see that. Now, we do have a few things to consider. So if I pull this off here, if this is a WXY and we're done here, well, we need to come off of this with a motive wave. And we've got it's a little bit ugly, but we've got a contender here now. So a couple of things we can look at here. If we're done here, and this is the, God, that's annoying. And we're going to move this up here. And we're going to get an ABC coming down here. Well, we got to start asking some questions. Okay, so first question always is, what did the algos do last? Right? Where's the fib swing? So from here, so I've got this pivot here, so I can check here from this pivot to this absolute low here. Well, that's damn near to the tick, right? Do you see what I've done here? I've just taken what would be the 1, 2, but this is a dominant pivot, right? We've got these others to deal with, but that's the last swing. That's the 2 before we go down. Now here's damn near to the tick on the 50, leaving, meaning that there's some sort of algo target down here at 675. So, you know, again, as I said, just because it's there doesn't mean that it must be realized, but we can't ignore it. So we got to consider it, and then, of course, we'd have to look at, give me a second here to squish it up. So then we'd have to look at this. All right, now what have we done here? We've just done another 50. So that is that's an algo, that will be a algo sell there. You can see they're already starting to sell it. Here's the target down here at about $9. So again, you know, we can't just turn a blind eye to that if you're a bull and if you're long, as I am. And so we've got to recognize that that's a very real possibility that we're going down one more time. And what would that mean? That would mean this has to get relabeled, so we'd end up with the Y wave down here. Maybe the C is not done, and we'd be way down here at $9. I'm not ready to go there yet, but I acknowledge that that's a potential target for us, and we know that an algo sold it there, and we know why, right? Dominant swing high, dominant swing low. We go right to the 50, and we're seeing a little reaction already. Now, I'm not saying sell it. I'm saying an algorithm sold it there. Right, we can see it. Hopefully now we're beyond having to prove that case. So there you go. So so you look at that and you go, well, why does it stop there? Well, you know, if you didn't draw that, now you know why. All right, so let's dig in here a little bit. I'm going to go down to the. Let's go to the 30-minute. I think I can get it there for you on the 30-minute. Okay, so coming off of this contender for my low here. Well, this is, you know, first glance is, whoa, that's look, we almost overlap here. But since we don't, we have internal retracement, and then a series of internal and external retracements here, and this is what I wanted to focus on. Now, first look at this. Well, there's no obvious Elliott count here that stares out. Now, we do have a contender, although it's a bit ugly, for a diagonal, right? We've got a 1, 2, up for the 3, very deep 4. It does not overlap though, so there's a contender for a 5. So that would be kind of an ugly diagonal, particularly given the depth of this 4, but technically, right, we don't overlap. So in a diagonal, on our fib swings, we'd be looking for the relationship from the start of the 1 to the peak of the 3. And looking there, well, we've gone pretty deep, right? That's remarkably deep. Let me phrase it this way. It's uncharacteristically deep for in a diagonal for the fourth wave to go that deep. You can see what would have been prettier was this right here, right into the golden zone. And we got a reaction that algos are trying to defend it, and then they can't hold it, right? So we still, with our Elliott hats on, we have a contender here for this diagonal structure. But you can look right here and just looking at that, can you guess what likely happened there? So from this pivot high up here down to my low here, what do we do? All right, can you see it? So that's 618 to the tick. Now this is interesting. So look what happens. We go, this is just to show you how dominant algos are in this. So swing high, swing low. We come up, we hit the 618 to the tick. Then we react. Here's the reaction, right? So the algos that would have been buyers here are stopped out. Now they wait. So this is actually a good example to show you what I'm talking about here. So the algo that buys it here off of the dominant swing low, swing high. Here we're into the golden zone. They start buying here. They're defending here. They get a little reaction out, breaks. Now, it does not mean, and I've said this many times, that does not mean that they have a stop and reverse scenario. What that means is that with that break, they reverse and they just take the next fib swing. So from now they go from swing high to swing low. They start selling at the 50. They defend all the way to the 618 and look at the reaction. Well, what do they run into on the way down? Well, they run into the other 618. And see, look here, and we go, and we keep going. So this meaning that the algorithm that sold here. So let's see if I can do it this way. So the algorithm that sold here, come here, has a target down here, right? They too are denied. So the ones that bought it here, right? So this is a good example. The ones that bought it here have a target up here, right? That's their target, right? They kick in here. They're looking for that. These guys win. They don't get the break. They come down. Now they run into this. So you've got this fib fight. Now here we can see eventually the bulls win it. But I just want to show you this because the point I'm trying to show you here is that the algorithms are not always right. Just because a 50 or 618 is there doesn't mean they always get their target. What I'm trying to show you is what they do is they just keep flipping. And eventually, they get on the right side of it. That's why they have the deep pockets to continue to do it. So if we look here, so the first one doesn't get realized. So the buy is stopped out. The sell, they get some traction, but ultimately gets stopped out here. So eventually, though, they're going to find one that's going to work. So here's this one. Let's check here. All right, so they come back to it on this side. So there's the buy at this golden zone. Here's the retest. Very common to see a retest at the 618. And what do we get? All right, straight to target. Boom. So you don't have to wonder what happened there. We know what happened there, right? And now take a note at where this has gone. Here's first target, second target, third target. We're within a couple of cents, right? 10 cents before we hit this target. So is that a potential 5? Well, maybe. But look what happens in here. So let me open this up here. Right? Once they get on the right side of it, all right? So they loss, boom, winner. All right, so, but there's other trades in here that I want to make the point to show you. All right, so you can look at this and say, well, what's the Elliott count? Well, we have a possible diagonal going in, but you don't have to, if you were a buyer, so let's say you were trying to buy the diagonal, all right, and you saw this happen and you said, oh, I know I want to buy that. Well, you, like the algorithms, got stopped out there. Even though we know that the diagonal 4, as long as it stays internal to the 2 low, still qualifies. That's an ugly diagonal, right? So, I was not trading this. I'm long from long ago. But so I'm staying long. But my point being, if you bought this, right, you're stopped out, right? So if you bought it here, stops on the 65, you're stopped out. Now you're waiting. Well, just like the algorithm, you're looking for the next opportunity. Well, it comes right here. Boom, boom, right? So we all had a chance to catch that. But look what happens here now as we start moving higher. So we see this one. This is perfect to target. But we're not done here. So now all we're doing is taking, this is the swing. So this is the last one that we hit. You see that? So this was swing low, swing high, golden zone, boom to target. Now we come to the 50. Look what we do next. Right? We're here to the 50 to the tick. All right, are we done yet? Well, look, you can see here they got first target. They've already gotten second target. They've already hit second target on this, but we're not done yet. There's more in here. So look here. So we just get this one, but it just keeps going. This kind of stair stepping, this is when you really, really get paid. All right, so from swing low to swing high, what do we do? All right, you see it? Here, let's see, maybe it's easier to work with this. So here's the 50, boom, to target. We actually get second target yet again, but that's not the only one. Do you see this here? Right, we've got it again. So let me put this in here. All right, so here it is again, damn near to the tick. All right, do you see it? All right, so here's just perfect Vegas wave. Here's the 50. We're in between the 50 and the 618. We go into the lips of the Vegas wave. So here's the buy, boom, right to target. You see, so we got 1, 2, 3, 4, 5 winners in a row. So my point is, now you understand why they will just continue to flip, because eventually they're going to get the first one. Then often when you see this kind of stair stepping action, that's just algo. That's just pure algo, and that if you can find that, you keep trading them until they fail, because eventually they will trail. The 618 will get the 65 will be broken, and then you have a potential trend change. But this is. Boy, that's what we're looking for. If we can find that kind of stair step, because all we're doing is just tucking in right behind the algos, and it's 1, 2, 3, 4, 5 winners in a row, just off of the simple algo pull. Now, what's the wave count in here? Who wants to take a shot at that? I don't care. I don't care what the wave count is. Okay, well, I've got something bullish going on. I've got a possible diagonal. I've got a motive wave. But am I going in here and trying to figure out what this count is? Not when it's doing this. It's just, first question always, what did the algos do last? Right, because that's what moves the market. What did they do last? Well, we just walk right through it. They leave footprints. Boom, boom, boom. Second one here. Again. That's why they will take the stops, because eventually they'll find something like this. And remember, this is happening on multiple degrees. So here we are on the 30-minute, could be the 15-minute. You'd see these just as clearly on the 15-minute. But you go to the hourly, go to the 4-hour, go to the daily. It's the same thing over and over again. Eventually, right? Hopefully you guys will just start looking for these, because when you find a series like that, that can make your month. That can make your whole year right there. A sequence like that, if you trade it right. And each one of these had very, very low risk, right? But with target. You cannot be blind to this. You absolutely have to have that on your chart. So just to emphasize that. So here we are. This is a classic to the dollar. We say, well, wait a minute. I thought we were looking. I thought all the volume was over here on Ethereum to Bitcoin. Well, it's going to be pretty close. You can anticipate that. See if I can find where I had it. All right. So very, very similar. So, where did I have? Oh yeah. So here's classic to Bitcoin. Okay, here we are on Binance, right? So here's the 8-hour, and it's the same kind of mess, although this looks kind of interesting. So we go from swing low. I'm just, I'm eyeballing that. So any surprise there, guys? Any surprise? Shouldn't be. Swing low, swing high. We go to the 50. We go to target. Look at the reaction. That's what you call a reaction. So there's no question what happened there. We're beyond wondering what happened there, I'd like to think. Okay, so that we can look at that and say, okay, well, all right, the 8 hours, pretty good on the 8-hour. What else is going on? Well, let's go down to a smaller. Okay, so let me, as I said before, anyone want to put an Elliott count on that? I don't. I don't really care. I don't need to. I don't need to put an Elliott count on this to get comfortable with what's happening. Now, if it were jumping out at me, let me phrase it this way: could I put an Elliott count on that? Sure, but it's not like I got to have my Elliott count before I even consider trading, because I don't know what the hell's going on. Now, you could look at that and say, okay, well, what's going on there? Well, that just looks like absolute chaos. Really, screaming high, long wicks. why even try and find a count on that? It's really a waste of time. Now, yeah, sure. Yeah, I've been doing this long enough that I can do this. I can go, oh, there's some sort of 5-wave there. Some sort of a diagonal, all right, deep overlap, but I've got a series of internal and external retracements. Right, then if you put it in an Elliott context, well, okay, yeah, well then I know I've got a diagonal, so I'm looking for the start of the 1 to the top of the 3, and what do I get? I'm looking for it at the 50, so yeah, having some Elliott knowledge there, helpful, but not essential. Does it really matter that I labeled it there? Right here, I'm just swing low, swing high to the 50, to the algo target. Right, well, what was the risk reward on that? Let's just measure it. Right? You didn't have to wonder about where to get out of the market. So if you were taking it all the way to the 65, well, that's 4-1. Right? Now, note, we're on an 8-hour time frame here. So that gap from the 50 to the 65 is pretty significant. Right? So institution, whoever's, who knows who's behind that algorithm, but whoever is behind that has got the pockets to withstand that. You and I may not. That may be too much for us or not enough upside. Well, 4-1 is not bad. I always tell you to look for 3-1 as a minimum. But if you're going to trade that, you got to look at the amount of risk that's there and say, well, okay, 4-1, but that's a pretty good drawdown if you're going to take that heat. So adjust your size accordingly. It's not complicated. All right, now coming down here, let's look at a few other things here. So here now we're looking at the same kind of scenario here. We've got this potential diagonal here. So here's a possible 1. Here would be the possible 4. So clearly I've got a diagonal happening here. I've got that same pivot here that may not be right on it. I can't remember if this was to the tick. I don't think we made it. Yeah, so this went to the 38. And stalled here. So we have essentially you call it a double bottom here. We're through a little bit. But we've got, sort of a layer of support down here. And now we've gone up. What are we approaching? So now if I go all the way down to the low, what do we run into? It's a 50 to the tick. To the tick. And what do we see? Reaction, right? So there should be no mystery. Now, that doesn't mean we can't get through it. You have to know that 50's there. And even if you just did something like this, just say, well, where's the resistance? Where are we likely? Come here. Historically, where are we likely to run into some resistance? Well, I can just draw this stuff, and just bring it over. So let's say this wasn't here, and I didn't know to do that. I didn't know to check those. Well, wicks, lots of ugly looking wicks in here. Yeah, we're getting through. We're coming back. We're getting through. We're coming. Now we're through it. Now it becomes the resistance. So resistance. Through, resistance, we get through it, it breaks the support. So we've got a squirrely, bouncy, ugly market. What's the advantage of the Elliott wave? It lets us at least try and organize the chaos. So yeah, I can get 5 out of that. Well, then I can get, pretty textbook ABC coming out of that first move down, ABC. Well, that's pretty much anyone can spot that. That's not too hard. That you don't have to be a master Elliotician to see, oh, that looks like an ABC. And then we can just do this basic same stuff we would do every time. Well, we know a B wave, if that's going to be an A B can go to the 786. What do we do here? It's third target to the tick. So you know what that's going to be. So that's going to be very close to the 1618. That's going to be right in the pocket for our wave 3 target. Right? We know. So pulling this over. Where's the highest probability for a wave 3? Right? Between the 1618 and the 175. Where do we go? 1618 to the 175, right? So you think this is trading technically? Okay, so we got an A, B, C, or 1, 2, 3. Either one. Could be it's 1, 2, 3, 4, 5. What would that would make that the A wave. After all of this, if we've got 5 waves coming down, that's an A wave. Or a 1 wave, I suppose it could be. But considering that we have a 5 here, more likely that what we have here is some sort of an A wave if you're going to count it that way. But, does it really, do I really, it's not enough there for me to say, oh, I've got high conviction in what is a bizarre kind of count. Like, so I don't gravitate immediately to thinking, oh, 1, 2, 3, 4, 5 could be A, B, could be A, B, C. I don't, just don't get overly, most people come to us, they're so caught up in the Elliott wave that they can't see the obvious simplified versions of what to trade because they're trying to master Elliott wave. It's not essential. It's kind of the point of everything I'm showing you in both videos today. It's helpful. It is not mandatory. So don't get overly caught up on that. Now, same thing here. I'm going to go down to the 30-minute and just show you the exact same thing. You don't need to get caught up in it. So here's our, let's see where we are here. Okay, so here's our low. So could be, we've got a possibles, just like would be very similar to what we saw on the to the dollar, right? So we've got a possible diagonal, right? We know we'd be looking for the start of the one wave to the peak of the third wave. We'd be looking for something right here. Now, just eyeballing that, right? Anybody wondering what's likely to be found there? Right, so here, start of it, so first we have this one here. All right, so let me just take you through these, right? So one wave, two wave, into the golden zone to the target, damn near to the tick, right? That becomes our 3 high. Now we go from the start of the 1 to the 3 high. I'm gonna get right on there. Well, we don't quite make the 50. Well, what do we run into? Well, it looks like it might be some. Let's open this up a little bit. Let's see if there's anything on the way down. Well, it looks like from this pivot here, we get the first one. So here's to the tick. Here's the 618. Get the second target. First one just rolls right through it and gets second target. We actually end up going through the third target. So I've got a contender here as a 1. So here was do you see it? Right. So here's the algo sale. It's a little tricky to see it right there. It's to the tick on the 618. First target, second target. Algos get paid, right? Short sellers get paid. Well, then we just keep going. Well, then I get a pivot here. I've got some sort of a pivot here. Okay, what do we get? Here it is again, right? So here's the 50. It's a little tricky to see it in there. Here's the 50. Here's the target. Okay, so we've had two winners in a row. Boom, come to target. We get the reaction. Right, so this is always the tell. So you look at that and you say, well, why doesn't it make the 50? Right, so if I pull back out and you go, oh, it didn't make the 50. Well, it ran into a target and you're getting the profit-taking reaction that came off of that. All right, so let's pull this out. Well, so I've got a contender now as a 4 here, and I know why. I know why it pivots here. Well, what's the next thing that comes? Well, let's just start tracking it. So I take it from that low. This looks like it might be a hair deep. Right, so you get a little well, that's a tricky one. So note what happens here. Right, it's a little sloppy on the 6.5, but look what we do here in going to target. So for whatever reason, they stay with it because there's the tell. All right, there's the reaction. Look at the reaction. Right, so some stop running, likely something else there. You've got a little cluster here. Might be some structural support kicked in here, just some prior resistance becoming the support. Contender here. I won't take you all the way through the dig there. This is the more important thing to tell is that now what do I have here? I have a significant pivot because look at the reaction. So question always is, what did the algos do last? Right, so here, given that reaction, I know this is important. So let me pull this off here. All right, let's consider now from all the way. Well, let's see. Let's get this one off. So we come swing low, swing high. Here's a slight front run. Slight front run on the 50. What do we do? Right to target. Boom. Reaction. Okay, so we know that was an important pivot. We know this is an important pivot. So now I'm going to go here, and I'm going to pull this to here. Well, let's see. This was... Got that right? There it is. Bring this, I'm a little too far off to the side. Okay, so let me bring that in right there. Okay, so here it is again. All right, you see it here? So here's the front run on the 50. Boom, right to target. Test it again. Now, can they get through? Well, certainly possible, right? You trade them till they fail, right? So here's the last one. So let's take that off. So what do we see now? So here's the potential top we're looking at. We've seen this reaction. Looks like I've got an ABC coming down here. Well, what's next? Well, let's see it. We trade them till they fail, right? So here's the low. Here's my, looks like that's my first high here. What do we do? Right in here, in between, splitting the golden zone and you see the reaction. Now, are we done here? Hard to tell. So it looks like they stay with the first pivot. So so note here. Look how good the Vegas wave is here. Into the Vegas wave, Vegas wave, Vegas wave. Here's the target, right? We're working for this target. Right? So, I mean, you just have to know they're there. So even then, if I go down again, I think you've got another one here, if I'm not mistaken. So let's look again. Right? It's just a series of these. So if I go from swing low, let me get this off here. Okay, so that's one. I don't know how many times in a row that is. It's 4, 5, 6. So literally in the golden zone again. Boom. Now, does it get there? Well, no. There's no reason to think that it wouldn't, right? You trade them until they fail. It's the same thing, guys. Every time. It's the same thing over and over and over again. Same thing every time. So we've got multiple targets up here. Right? So we've got this one, right, which is working off of this. We've got this one working off of this. And then if this is ultimately going to get impulsive, we're going to get something, so if our correction is complete and this ends up being the ABC, right? So in terms of trying to organize it with our Elliott hats on, if this ends up being some sort of an ABC, then this could be some sort of 1, 2, and we go again. Right? So first question, where are we in the broader count? If I can't get a feel for where we are in the broader count, what did the algos do last? What can I see that they did last? Does that help me? Right? I'd like to think I just took you through enough there that you can look at this and go, man, who cares about the Elliott wave, right? So, not to make light of it or to minimize its value. I use it every day in every time I look at a chart. But what the broader point I'm trying to tell you is that you don't have to think, you don't have to look at something and go, I don't know what the count is. Well, then just move on to the next trade. If you're interested in a coin or a project or an asset for whatever reason and you can't get a count on it, that doesn't mean that it's not tradable. It just means that for whatever reason, either you can't see it, you don't have I'll use the word practice. You don't have the practice and the skill set yet that comes from doing this over time, and you're not fluent with the rules and regs. And I'm not trying to say that I'm some sort of an expert. I just, having done it long enough, I have a fairly good idea of what to look for. But again, I'm trying to come back to, I don't want you to get overly hung up on it. It is useful but not essential. Useful but not essential. Right? It's another set of tools, another way to try and organize what we're seeing here, right? I mean, there you go, right? What more do I have to put in front of you than that? I can even take this off just to make the point. That is tick to tick. I mean, guys, you got to pay attention to these, all right? That's tick to tick right there. Any questions? There shouldn't be too many, right? Oh, and by the way, you had 3 more on the way. If you're trading the hourly, boom, boom. You just took your profit. If you're trading the 15-minute, you had 1, 2, 3. You should still be long. Right? It looks like you got another one here. So you got to pick a time frame and then work within it. Here, I tend to like the hourly. I will go to the 15, but I always start with the hourly. If I can't see it there, then I go to the 4-hour or the 3 just to get a sense of where we are. But this right there is all day long. That's what we're looking for. That. All right, guys. God, I've gone long on both of these. All right, so I guess we'll wrap there. Just a reminder: give us a follow over on Twitter. We're very involved with our followers there, and we engage with you in all sorts of ways and give you an opportunity to vote on what we're going to review in video next or particular subjects that you're interested in. And you can always learn more about what we're offering to you educationally over at Trade Devils University, which you can find at tradedevils.com. All right, guys, went a little bit long today, so I'll wrap it there, and we'll be back to you tomorrow.